Okay, got it now. So we got video, we got audio. Something about my bit rate is not working, but that seems to be okay. All right, so we got that, we got that. Let's get that down. Okay, so Erwin, Simon, we got sound, we got video. Wants me to change my stream bit rate. I had no idea how to do that. Check, check, check. We got anything? Working. Oh my God. Finally. All right. So I'm going to just assume that everything is good. So I'm going to close it. No, pardon me. I'm going to leave the chat up there. All right. So we can see here. Okay, good. All good. Oh, I'm so glad. Okay. What a nightmare. That, as I said, it's really embarrassing. Probably 10 million people live stream without any trouble on YouTube. I have such a struggle with it. It's really embarrassing. I don't know what the issue is, but all right. So here we go. I guess you can see this now. Like, oh, I know you have a lag. I mean, really just sideways, with the exception of this morning, where we had to cut this nice pattern here, sideways, little breakout. We did actually, if I'm not mistaken, get, no, it looks like a double top. So we didn't get it. So we're kind of a little rangy here as well. Range, break, back down. We did not get a new high. So, you might look at this as failure to get a new high. Little divergence here would suggest, well, this is a little, let's get rid of that. All right, so we see this price action. So right, you would kind of assume this until we get out of it. So I will just kind of mark it off like this, as I've been doing, saying, okay, we're going sideways here. I don't really want to. So look at the EMA. Are we good here? Okay. So look at the 21 McGinley. It's just going sideways. So there's really no edge here. How are we doing on? How are you guys doing? Okay, yeah. So we got a few on. I mean, I had a good morning. I got really lucky here. I had something big on here, right, and there was that big push. I had size on there, so made for a good morning here. So I think there's a lot of hurry up and wait. One, we've had the Fed speak today. Likely, I mean, now wherever it's factored, the expectation is at least a quarter. Market seems happy with that. That big rip yesterday was all pretty much options driven. So after the Fed speak, the zero DTE options, just they started buying calls hand over fist. And of course, market makers have to hedge. So that's why these moves like this have become so common. These 20, 30, 40 point rips. Before zero DTE, that was not the norm. Now it's so common, you're almost looking for it because we have zero DTE options expiring every day. So the market environment has really changed. You can't fight it. You got to accept it. But some insight to that, it would be useful. I use a few things here, and I don't want to get distracted by that. But keeping an eye on what's going on with the options and understanding that once we start one of those rips, they are very much fueled by market makers covering, right? So what is retail and institutions, they'll buy calls, zero DTE calls. Market makers need to be neutral, so they have to, whoever's buying, almost doesn't matter, but whoever's buying those calls, if they're buying in size, market makers are selling it. Thus they're short calls, so the market starts to go, they got to hedge, they got to buy futures, right? So that's why you get those kind of moves. So similar today, except we didn't get the rocket fuel. Let's see, so if I bring it, let's see if you guys get that. I apologize, I have to look off to the side. I think you guys know I can't, there's no place for me to put the camera up since I have to stand. Now, let's see, do you guys, I think you guys see this. I know there's about a 30-second lag. Oh, that's Fed speak. Fed speak. That's what I mean by they just have to cover, right? That's abnormal. Well, not anymore, right? That's the norm now. So unwinding it here. This actually is I view it, it's just, call me crazy, that we could not have had a more bullish event for where we're going. Now, we broke the gold in there, but just wicks. So it's a little tricky. All right, this has changed over the years that I've been tracking this. That it used to be if a wick went through, bear's ball, but we're seeing just more and more wick only. They're still getting targets. Now you could do it this way as well. Of course, we have this two of them. A couple of big fat targets up here. Would not be surprised. In fact, I'd be surprised if those didn't get hit, actually. Looks like we just did another one, if I'm not mistaken. A little front run. Pre-market high, market's been keying off of that all day, as it's prone to do. Pre-market anything, right? It's just something an algo can latch onto. More sideways. Well, can you trade this? You can. You're buying the low, selling the high. Of course, if you keep doing that, eventually you're going to be wrong at one point because we will get a break. This is one of those times where I look and I go, okay, well, how much if we do break here? I come back to that. Scalpers are afraid of heights, right? Because they always see resistance above. Well, okay, I've got a fair value gap. I got a 50. I got some algo targets. I got another fair value gap. I got golden zones here. I got the pre-mid. I got the opening. I mean, I got a lot up here that would be problematic for entering the market with expectations that you're going to get a big push here. As I look at that, so all I see here is I envision looking forward. What I would want to see is one of these pivots. This here, one of them. That's what I'm looking for. Because right now, as I go here, as we approach that, if I were to approach that with high ticks and the RSI was a little hotter, you guys know the TDI is just a fancy RSI. If we got a little hotter, this would be an area that I'd be looking to sell. If we push up here, that would complete the price action rule here that we would push to get a new extreme here, and then maybe a pushback to go again. But I don't want to buy right into that fair value gap. Well, here's VWAP as well. Now, let's get on the other side of that, clear some of this. Now, look, here's another way to look at it. You see a little resistance up there? So where are we? Right, it's pretty typical S&P, just in an algo box, right? Between one golden zone, or well, here we're 50 to 50. Just going sideways. Now, let's get over here, see how it looks, footprint. Neutral tick, now climbing higher, but this chop, when we're not looping, there's no real edge here until we get cranking a little bit further. Let's get you back over here. All right, so how are we doing, guys? Everybody is still, we're seeing everything good? Okay, good. This has been kind of the battleground all day. We've just barely got, well, let's bring it over here. This, it was early today. There was big size here, right here. Look at the size, right? Between all of this and all of this. So that's been the resistance. That was the big trade I caught. Well, yes, I posted. It was not hard to spot. That was not a hard trade to take. And I think a little bit of good fortune there as a big sweep came in. So now we've broken it, but we're not breaking. Well, here again, look at the size here. This is where the footprint is so useful. So if I'm just looking at a candle, I don't know that size is there. Okay, now it gets tapped and they tap it again, and now we're through. You can see this process over and over again. Now I got a big cluster here. But if we come back, you can kind of envision what's happening here. We got to get up here and then come back down. Otherwise, you're chasing. You guys tell me. Would you? I mean, I like the look at the delta here is climbing, but would you take that right into this? I wouldn't. Not yet. I mean, if well, what I wouldn't do is short it, right? Given those 3 bars, but there's not enough to say, okay, let's let it rip. Now, I keep these two pretty close because when it comes to decision time, I'm coming over to the footprint. But for where I want to be looking, I'm almost always. Well, if we're talking the S&P, I'm almost always on the 2000 tick. I just changed the template around a little bit just for variety's sake. I actually set up a bunch of other ones to look at some other markets. But I at least since I ended up trading this morning, I find there's real advantage to really focusing on 1, maybe 2 markets. But you try and split your attention between 4 or 5 markets. I think that can be counterproductive. Some people can do it. I've just noticed my results have gotten much better given a focus on 1, maybe 2 markets at the most, primarily the ES. And what happens is you get to have you start to get a real feel for what it likes to do. And that can be useful. How are we doing? Okay, everybody. Oh, hang on a second. All right, Brian, man, you've been at MIA. Glad to see you back. Or maybe you just haven't been posting a lot in the room. Okay, so here we are at the top of the range. Oh, I like to keep the PATS indicator on just to look for those clear second entries, almost more so I don't miss them. But the other feature in the PATS indicator that I like so much is the consolidation. Now I have them in white here. It may be a little harder for you guys to see, but this little consolidation, I thought that was a great feature that the TDI Dev built into this. So we can see this little consolidation. Right now, we've got, this is not uncommon, right? We've got swing, consolidate. Now, are we going to get that new high? Right now, if we get it up here, again, I would be looking for this. That's what I would want. All right, so boy, these low volume nodes have been just a great addition to the lineup here. You see how it was significant here. Now we're coming back to it right at a 50. That's likely the 50 from the high. Oh, I'm going to guess it is. Let's take it from that to our low. All right, there's our 50 at the, so you see the little, I'm not saying don't buy it. I'm just saying so essentially this is a breakout, right? So it's a breakout trade, which I never ever do. I think I've made that pretty clear. I'll take that, right? With that as a target. It's fine here. Go get the, well, now note what we're doing. We're getting the new high here. So you could start drawing a channel again, right? Just looking for, okay, you got to start somewhere. Swing, retrace, long retrace, up for a new one. Yeah, may not let me get that out of there. Yeah, well. Okay, very tight channel. RSI climbing, delta climbing. Price pattern being realized. Coming into imbalance here, right? So this is imbalance. How do we deal with it? There's the 50. Nice little cluster. Now, if we were to get up here, I should know, let's see, who, oh, I'm so glad, Brian. I'm so glad, right? Well, I know there's some people that they trade away here. It's tempting to do it, especially when you have a good morning. I was on fire this morning. Let's see here. Someone, who was it who was asking? Someone who I thought I recognized from the other room. Damati, that's who it was. Damati was asking about how to incorporate the tick into your trading decisions. Well, it's ultimately more of a scalping tool. It can be more than that. It can be a launch point. But hang on. Let me get over here where I can see you guys. If Damati is on, hang on, I gotta find you guys. If Damati is on, this is, you get a slight edge here. That is nothing more, right? This is because all of this is being done by computers, and all of the stock buying and selling is all being done by algorithm. At least 95% of it, if not more, is all being done by software, buy program, sell program, algorithms. Call them what you will. When they're with the uptick, downtick, what the advantage we get here is we can kind of track the ebb and flow of when they crank them up and they're buying stocks to when they're selling stocks. So when we get into these upper ranges where we get, you can kind of, if I scrunch this up, when we get into these upper ranges here, which is why we want to mark these, when we get into that red section where you're over 800, you're getting a little bit of an edge there. It's not 100% going to work every time, but you're getting an edge there because when we make the loop here, this is buy programs all the way up here, and then here they start to, it's not that they're reversing, they're selling, they're taking the profit here because this is, they're doing this for, ticks, but in massive size. So buy programs are buying, now they're selling. Now if we come down, then they're selling, and then they start buying to take profit. So it gives you that slight edge. So what you're trying to do here is combine what we can see on the chart as we hit extremes, or something like this was perfect, right? This was classic breakout. And if I'm not mistaken, that was this low. Oh, let's see, that was 1130. That's this low. So it wasn't quite a new low of the day, but do you see how as we get to that extreme, then you start to look for confluence? Okay, well, all right, buyers start to come in. I get the shark fin on the TDI at the 32, and I'm at the low tick of the day, or within a couple of ticks of the low tick, and then I go all the way screaming up, and I get the high tick of the day, right? This move here, but you see, this move here is really, it's just to right here. So you can't assume, oh, I'm getting the low tick of the day. Oh, we're going off to new highs. It's a scalper's vehicle for entry. Now, if you scalp it, you can. I'm not saying don't leave a runner. You can leave a runner because I've seen them go, from low to high. But the trigger point often will be a tick low. So there's almost no way to not have this be useful for the ES or the YM. It's just another tool that you can use. It's not, again, it's not 100%. I've taken trades at the low tick of the day and had my ass kicked. It would be, it's got to be confluent with everything else you see, and then keeping in mind that if enough size comes in here, they're going to blow right through it. So you still, of course, going to have a stop on it. But it can be really useful just in terms of trying to track what the buy sell. See, this isn't futures. This is the underlying stocks, right? Are they buying stocks? Are they selling stocks? And then we see the representation of that in the futures market. So here we sit at this fair value gap, which has been influencing the market all day. We do have the new high from this pivot. So the swing, consolidate, new high. We're a little bit on the other side of VWAP. So, it's getting interesting here. But do we want to, again, do you have the headroom there? Well, let's look over at Bookmap. Yeah, there's room up there, as in there's no massive size sitting up here, at least yet in the book. Oh, let's see here. I've been watching the RTY lately, just it's underloved. Let's see if I've got anything else here that might be interesting. So here's just really an emphasis on, push that off, on market structure. So we see here's the last break of structure. So 5-minute trend is up as we come into this consolidation. So here we get an RSI, and then this is the TDI volume. What it's doing here is it's noting the high volume. We see here we went past 3 standard deviations of the average of volume. So that's why that gets highlighted. So I know I have big price action here, heavy volume. And now we're coming out. This is that consolidation. Now we're coming up to another imbalance where I have opening range, IB mid, imbalance. These are things, there's yesterday's high. These are things algos will use. Doesn't mean we can't get through. It just means that beware, because that's why we want them on the chart for you, because we know an algo will use it. I mean, we're never, you've heard me say many times, we're never going to know what they're doing. But if we can look for areas where we consistently see them doing things. I'm convinced there's an algo at the pre-market high and pre-market low. We'll see. My guess is, this is just my guess, right? I posted this room. My guess is we blow out the high before the end of the day. That'd be my hunch. It's a long way to go. I think this is all just, so, well, you could make a case. You could just look at it and say, okay, down we go. And then what do they do here? Accumulate, 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 accumulate. Now, as we go back up here, some pretty big earnings this afternoon. But everybody's watching the bank and the Fed, right? If the Fed sneezes, right, the market reacts. All right, how are we looking on the 15? Well, if I bring this together, it's always good to kind of get that big picture. Okay, so here's the break of structure that took us up. Now we're all the way back down. Now we're kind of back to midline. Right, trend is up. See, I think you can see this better on the 2K, on this move, the swing. Do you see how we're doing similar? This is, again, the more you watch it, the more you'll see this. So swing, sideways, we're just, right, is this distribution or shorts accumulating, and then we drive down. So it's swing, sideways, down, sideways, up, sideways, up. I think it will help you. Your chart should look like this throughout the course of the day. There's no way that won't. Well, I think this will help you. I should say it that way. I think this can be helpful to you as you say, okay, wait, am I trending or am I trading range? Am I trending? Am I trading range? Am I trending? Because if I'm trending, I can start to apply the trend line rules. Now, is that a deep enough retracement? Well, see, I look at that and I go, I don't know that I want to buy it right in that imbalance zone. You've got a pretty good amount of distance from the McGinley, so this area would be of interest to me. Using that pivot. You come down here, I get the POC. I'd be anticipating this. Here's my swing. If I come back down here, I'm going to anticipate that we're going to go get a new extreme. Maybe that gets us up to these golden zones. Maybe it goes now, right? No way to know. You're neutral on the tick, so there's no advantage here. Yeah, I was thinking we might get more action this afternoon. I still think we might. It is kind of hard to get this all rolling at the open. I gotta confess, the afternoons have been so good. I might switch this so we do them in the afternoons. We'll see. We'll see how it goes with regards to people watching. What volume profile is that? Jim Bino. Hey, Jim Bino. Wait. Oh, are you on both sides? Oh, why that name's familiar to me. This is our newest volume profile. I'm assuming that's what you're asking about. This is the new volume profile here that we just released. Oh, I can bring this out a little bit. All right, so let's take, I like to keep the ticks down around 2 so I can see a little bit better. So this is the area that really draws your attention, right? All the imbalance up here, right? And I've got golden zones as well. Okay, so this is doing just what you'd hope it to do, what you'd look for, right? So we're trying to visualize what's the trade. Come down here. Here's the McGinley. I got a fair value gap here. I've got imbalances. You see these guys got, well, they probably made some money. They had to cover here. You can see these guys here, had to cover here. Okay, pretty good dump there. Not huge size. That's the advantage of the footprint. I can see, okay, is this a big drive with heavy volume? Okay, well, it's pretty much doing exactly what we were looking for. Now, just give me some signs that you're going to turn, because when we're coming down like this, now micros maybe, right? I might just start buying, saying, okay, well, if we break this low, then I'm just going to take the loss. But I might be looking to kind of average down here. It's a little more dangerous with full size because you can get yourself spanked. But with micros, you might buy a couple there, a couple there, a couple there, looking for that to go. This is kind of how I will watch it. Although actually, well, this I usually have on a monitor up above. Okay, so here we come into the golden zone, that little micro. Let's see how it reacts there. Now, what you want to see, it doesn't have to be in the pocket of the golden zone. I want to see reaction there. I want to see this algo. Well, let's come over here. Okay, what can we learn from this? Well, the tick's heading lower, so I'm in the buy zone. You can almost think of it this way, right? When I'm down here below 400, I'm in the buy zone. When I'm above, I'm in the sell zone, right? I mean, it's not rocket science. It's pretty straightforward. Okay, so let's see how we do. If I got a new tick low of the day, and the other thing that this helps is that I don't want to be selling when I'm in the sell zone. I don't want to sell down here. I'm looking to be a buyer, but I might wait till I get some signs of something other than a negative candle. Okay, looking better, right? So now you're buying into a fair value gap, but I'd be comfortable buying that, right? You can see the algo fired here, right? You can see it. Like, I can't make this shit up, right? So then here we go. Now would that be enough? Now you could do that with a tight stop. I wouldn't mind a little bit. I'd like to see a positive delta. See the buyers going a little harder. Very low risk, right? So for micros, let it rip. Here, let's take those off. And when you're unsure, or you think, oh, I think we're going to go here, don't shy away. Don't feel like, oh, only pussies trade the micros. I think that's silly. I switch back and forth often. Okay, what are they wrestling with right here? They've got the resistance. These guys are fighting it. That's a fair value gap here is what that is, right? That's not from the volume profile. Do you see that's a fair value gap? I'll come here from this low to this. So I've got this, they're working it. So let's come back here. Right, literally as I drew it out. Doesn't mean it's going to go here. But we can look and say, well, the expectation is here. There's reasonable expectation if we hold here that the next target would be to break that high. Let's push this off to the side a little bit. If we break, now we're going to envision something different, right? I'm always trying to forecast, right? If it's then I'd be looking for that, right? Because that's how the market likes to move. Watch that RSI. I generally I almost always. If I know I'm in a trade I don't like, I'm on the wrong side. I'm the color of the RSI. If it's red, I'd rather be short. Remember, in the middle, you've essentially got a longer term RSI, which is that dotted line, which can be useful. So you really, this is such a great indicator because you're getting really 3 indicators in one. I should note here, I also have I'm using the efficiency ratio, which is what we use to color the Renko bars, just to show ease of movement. That's really what it's trying to show you. So for coloring the bars, white being, okay, congestion, no edge. Now we're going to hold here. Let's see how these guys are doing. Struggle. Oh, anything on the larger I can offer up over here. Well, this is kind of interesting, right? So they come. That's why you got to look, right? What do we do? Right into that low volume node, right? That's our pivot. So this still seems to be the pivot that's in play that would be driving the candidate here to get up to that. Now that looks reasonable there. We might get up to the next imbalance, but look, we have to get through. We got to clear that, then we got to clear the pre-mid. We got to clear that golden zone. We got to clear the next imbalance. Then we got to clear the 618. And then I got to clear all of this to get to the IB high. If they're anticipating good numbers, that should be able to do that without any trouble. This is kind of interesting. Here's the YM doing something. It seems to be a little bit ahead. Right, ran right into that golden zone. Looks like the YM is doing the opposite. Right, got the 65 to the tick. YM is often very technical. Boy, it's just amazing. Right? Just amazingly consistent. We don't have anything here. Looks like everything broke. This is, look at the swing range here. It's just, this is fed All Fed related. What are they going to do? They're going to raise, they're going to lower, they're going to pause. Is there anything there? Any technical pattern? Not really. The last thing you've got to work with here is that you bang the golden zone and you get into retrace. Where's the target? Well, interestingly, these are all breaking, this is so you note from here to here, any of these, right? They're all breaking, but then the other side is breaking or not getting to target. So we come here and we hold, right? It's beautiful, comes right to the golden zone, but we don't get target, right? So up we go and now it breaks. So we just have this giant range. This is the last thing we can see. So it's bear's ball, which seems counterintuitive, right? Oh, wait a minute. It looks like a 5 going up. It does. But right now it's advantage bears just because of that. Big fair value gap. Pay attention to these, right? Big inbound. Well, you can see why, right? And how far it went. So you know there's going to be unfilled orders in there. I'm bullish, which is easy to say because the market always wants to go up. Let's see if we can get there. Get you out of there. Okay, let's see. We got any questions? Scalp out Erwin Becker's kicking ass. You guys, you don't realize the sacrifice he makes for you guys every day because he trades less so he can provide support. And he's one of the best traders I know. So he's sacrificing that so he can support you guys. You know, we have a nice little business, but he does make that sacrifice more than I do. Mainly because I can't answer the questions. But Simon also does the same, makes sacrifices so he can help you guys. So when Erwin has time to trade, pay attention to what he's doing. A little snoozy. 2 o'clock. You know, this is when we started yesterday. Oh, for those of you book map. Oh, I gotta check with that thing you were talking about this morning. I may have that ad on. I can't remember. There's not. Okay, so maybe this is a little bit of a flag down here for the 352. You're not getting any particular edge here. Looks like we're starting to. So if it starts to come down, where will it go? Right, it'll be looking for that liquidity down there. That's what we're seeing here. The market will move to liquidity. Let's get you off. What else do I have? Now this is on the 10 range. This is a 21 McGinley. It's going to look different than the 2000, which is where I think it really shines. All right, so that didn't fly. All right, we never got a good push there. So back into the, well, okay, so what can we deduce from this? We come up, we tag the 50, we hit that imbalance, and now we move down. Until we break this low, you would still anticipate that unless we break this low, that there's going to be a push to try and get that extreme. This is just confirming what we all know, right? 80% of breakouts fail. Breakout traders they just don't learn, right? Thankfully, they don't learn. It just takes one for them, right? And then they'll do it again and again and again. So this breakout fails. Not uncommon if you see a trading range like that you'll get something comparable. If you broke that distance here, look for that break on this distance here, and then you're kind of back into, all right, well now I'm essentially trendless. All right, I've got a little drift lower with the McGinley. This was the chance to recover. We're going lower. No real advantage here. We're back to neutral. So would you buy it? I wouldn't. We're just trading off. Well, let's get you out of there now. You never really got Well, as I was saying, I like to be on the right side, on the same color as the RSI. We never got a. This was the potential. We never got it. So we're just sitting right where we've been struggling all day, right at the POC. Funny how that happens. Looks like the market really wants to see the earnings. What else do I have over here? RTY. Don't see much there. Okay, we're heading up here. Now there's headroom there, so you've got headroom there, but you're going right back into this consolidation here, right back into it. Second entry long is there, but you're right at the McGinley. I would let that one go. You might look here and say, okay, there's the support down here. We tag it, right? I'm just using that wick. That's a handy little feature in our toolbar. Very few people. You guys have heard me say this before. The single most underappreciated indicator we produce, toolbar. I know there's other ones, but I think this is about as good as they get. I've seen toolbars $1,600 that don't do that much more than we do. All right, let's see over here. What else do I have here? 5 minute we looked at. We're just sitting in that high volume range. I have more difficulty with the 5 minute. I know TDI Dev, that's his go-to time frame. He loves the 5 minute, and he's got a feel for it. I've really gravitated to the 2000. For those of you that like smaller stuff, here I should probably get this stuff out of here. As a matter of fact, I think TDI Dev likes the 5 minute and the 512. I think that's his pair that he and then a 1 minute on the footprint, which is a different setup, right? So that's interesting. We don't all use it the same way, and I think Bobber 70 is slightly different as well. This is the multi-time frame moving average, so that's the 15-minute moving average on the EMA that's on this. Gives you a kind of a bias. All right, we're climbing, we're breaking. Okay, are we going back up? I continue to be a bull. Again, that's the easy way. Some people like I've done both. I think you'll see more trades if you're down looking at a 512. If you're using that as your main focus, you're certainly going to see more trades. I tend to prefer to think of it as much like going to a footprint. If you don't have a footprint, you go to something smaller. This is a handy little tool. All right, so we can see if we break this is a unique feature in our toolbar. Many of you may not have figured out what this is doing. So here's the swing. If we come up here and we break this golden zone, then the assumption is the next time. And see how it'll keep pulling this up? Well, here's the next measured move, right? If we break, then you could sit down here and say, okay, well, if we get a close above, which we might have, if that breaks, and another thing, never to ignore these little dots, because that's going to be that. Well, here you can see it, right? So this is a significant pivot. When I see those little dots, I pay attention to them because I know it's a pivot that he's marking here. Here I've got one here as well. So is that a break? It's right there. I'd like to see a bigger break, and then this will follow it so that the next time down you'll have this as your setup. It's a handy little tool that he built. He trades this a lot. Trying to go green. That's a 21 EMA, that yellow line. I think I have the Devil's Breakout in here. Thought I did. Yeah, I do, but it hasn't given us anything today. I do have it, right? So here it is from yesterday. Oh, I'm very careful about doing that. I'll get us locked up again. All right. Okay, guys, let me do it. 5 minutes and 1 minute at the moment. Yeah. Mention. Oh man, thanks, Jim. It's more just a talk through and this and Q&A, and a lot of we have so many indicators. If we go on Thursday here, I set up the Renko templates again because I feel like our Renko traders are feeling a little left out. Just with all the volatility, I think the Renko it's a little harder to trade because you can't see because of the false open and close. But when it's rolling, let's see, long from 4170 footprint, still bullish, right? So Irwin is giving you guys, I hope you guys are paying attention. So he's long here off of, where's he long? 4177. So he's long here. Note the POCs are climbing. I'm going to guess, right? That's something I know he looks for. Okay, so here we go. So you can see this is interesting. So here's the break. Where do we go? Take note. Ticked those little dots, right? Because that's a prior pivot. We went up and ticked it, and that's the retrace. So this is broken. So here's the next setup. Looks like, oh, I see what he did. Here, he did it, right? He went, here's 4177, which he's long from. It looks like he may have taken it early. Oh, that's the 50. Well, you got a couple of things here. You have the swing, fuck, what am I trying to say? The market structure indicator here. This is the swing golden zone and 50. I'm pulling it from this swing as the counter. So as this goes up, it's going to pull these up. So it would be a front run on that one. It's at the 50 of this swing. I don't know if I'm making sense there. Let's see if I can show you. This is broken. So essentially now you're not paying attention to this. You're looking for this. But what a nice example here. Where I was trying to tell you guys, don't ignore those little dots. They can be 3 days old. Don't ignore them. The market won't. Well, you can kind of see what they did there. It looks like they just rallied off of that pivot. Prior resistance became the support. Now, here we go. Now, I like it. I would, if it's me, I'm over here saying, okay, what's happening? Let's see a little bit. That does happen. If you don't stay on this, the QM delta will fade a little bit. Okay, what we can see here is that this swing, we did not get a new low here to invalidate, so the expectation is still that we're going to go up and get a new high here. We got to get out of this range. You got a little bit of mixed signal here, unfortunately, because you also have this swing that has a break, so you could make the same case here that we need a new low here. Look what we're doing, POC, right? So the market is trendless. It's just waiting. It's waiting for more information. So this is a hurry up and wait kind of a day. They want to see those earnings, and we got some big ones coming. I think some major bank earnings are coming. Let's see. I should look at you guys every now and then. I have the camera way off to the left. Trading range. What we want is one of these sides to break, so we can say, okay, are we done here? So is it going to be the low? Scratch. No, nothing wrong with a scratch. All right, pay attention down here. I always want to be on the right side there. Okay, big bunch of market orders. So that's what that QM delta is showing us, market orders coming in. Now I want to see do you see that there's a fair value gap there? So how are we doing over here? So here I get an order block right here up into it. That's why it doesn't extend. This kind of gives you I'm flatlining here. I'm trendless. So it's someone asked me yesterday why a range chart. I like the 10. It's all just what you like to see. I like to see, well, see, in a 1 minute, this could just be one giant candle. In a 10 range, I'm going to see 3-4 bars in a row. again, there's no right way, wrong way. It's just what do you prefer? A lot of people, because of this guy who uses our stuff, who's a really good trader, Futures Flow. I think it's Futures Flow. He likes the 15 range, which is a little much for me. I prefer the 10. So 2.5 points. I like to say, okay, 2.5 points, then I got a new bar. Is there anything to do here? Look at the McGinley, just flat. It's just rotation. These, let's see what I've got going. All right, so I will watch these and say, oh, these are really playing well. And then if I was going to go to the auto trader, start looking at, so I have Delta Flip. I've got the trap, reversals, and tails. And then sweep. I think what I've got there. So what have I got here? Those are Delta traps, right, in gray. That's, if you guys follow Futures Flow, that's his go-to. I think TDI Dev, that's also one of his faves, the Delta trap. It's bouncing on that McGinley. Anything to lean into here? That's where I think we're going. I sure as hell could be wrong. Oh, is it going to let me get that out of there? I would expect, this is me. Can you clarify the little dots are they for, no, they're, let's see, when you say little dots, hang on a sec. Do you mean on this thing that I was just talking about? Where was it? Hang on. Do you mean these little dots right here? Is that what you mean? Or do you mean Jim Bino? From the pivot indicator. No. Okay, so I have, I don't have any of the pivot indicator on here. The little dots are prior pivots. And that's what he's marking. So they can go back 2-3 days, which is what I'm saying. You don't want to ignore them. Let's see if I can show it to you what it's from. We're going back. I always worry about locking Ninja here, so I'm a little tentative to do this. Last time I did this, I locked up Ninja. Well, it's okay. There we can see it, right? So it's this pivot, Jim, right? So he's marking that was significant to the market, and it's coming all the way across. So here it was resistance. We come back through. Now it's support. We're back through. Now we're coming back to it. So let me, hopefully I can do this without crashing Ninja. That's what those are, right? So you see it here, right where we were drawing, where the POC was lower. Now the POC has moved up a little bit, but we're still in this trading range. So pivot points. I'm sorry, Jim. They're just swing highs, right? I don't mean pivots as in the pivot indicator. They're swing high pivots, right? So this would be a pivot. This would be a pivot. These are just significant pivots to the market. I don't know, maybe Erwin can comment on that a little bit more. He could talk a little bit more about it. I think I did a part of it on our videos. In terms of how he's identifying those pivots and why they stay on. But all I know is that, well, when I see them, I pay attention because I know the market respected it. It was a pivot that was significant. Okay, outside, this is really useful here as well. When you see the contraction and expansion, it's the same things happening in the QM delta. Exact same thing, right? Contraction, expansion. Contraction, sideways, expansion. Now we get outside of 2 standard deviations. Which indicators are the swing high pivot dots from? Swing high pivot dots. That's auto fibs. I know what you're asking, Brian. That's from the auto fibs. It's built into the. Let me get it up over here so I can show it to you. I'll just drag it over. I think I can do that. Let's see if I can drag it over. I think it'll let me do that. Yeah, it will. Okay, so it's the support and resistance that's built into auto fibs, right? So this is how I set it. around current price action. And so if you want, I think that's the default. We just, by the way, this just got a new update. It's now 1.013, I believe. I think there's a new version of this, but that's a good place to start in terms of your setups there, or I should say your parameters. And then, you know, I tweaked this a little bit because I put the 65 in. Up to you how you want to do it. It's kind of a hidden bonus in the auto fibs is that you get those pivots. All right, so here we are, right, trying to break again. Let's see if there's we get any clues over here. We got a little golden zone here, but that's, what is that marking? Still just rotation. This would, you know, maybe you get one here. This would be a scalper's market. I wouldn't have big targets, right? So again, how aggressive do you want to be with a 50 and a bunch of golden zones up here in a fair value gap? You know, scared of heights, maybe, but I'm more protective of capital. See here, I get nothing here, right? So you know, if I'm here, I got nothing. It's not helping me here at all. So I have to go from here, since I'm not, in my view, at a decision matrix. Right now, I'm gonna come over here and say, okay, well, let me see what does the pattern look like? Do I have anything here I can work with? Well, we know breakouts tend to fail, but we've now tested, rejected, tested. We're gonna get through this time. That's the big one. Let's take that off since they're already marked here. All right, so big issues up here, challenges, right? It's not that we can't get through, but I want to know that they're there. Okay, so we're coming up into the imbalance, edge of value, and a low volume node, which is not surprising. At the edge of value, you'd have a low volume node. Okay, so here, since these did not get a new low, you'd assume that this is the swing. We kind of go sideways. We don't get a new low here, so now the push is to get a new extreme here. First target hit. Oh, he's back in. And see, you guys pay attention. I got to talk. I know. That's all right. I had a really good morning. See, he sacrifices to do the support. Not that I'm sacrificing here, but since I don't trade during these. What do we see here? Well, you kind of are looking to see, well, how does it deal with that? Now we're starting to trend up. Look at the distance from the McGinley. So we want to try and buy as close to the McGinley. So if we have any sort of retrace here and this comes back up, you know, as we were talking before, okay, let's see if we can get up and then come back and test from above. So you're not, you know, if you want to be long, this is not where you want to go. In my opinion, this is not where you want to go. You want to wait. And so you're long going into it. So if it gets rejected, right, you've got house money here. Right, I want to be on the right side of the RSI. Some sellers coming in, right? It's to be expected. Who's up here, right? So defense, imbalance. You get to where you can kind of feel the market. Okay, what's likely happening here? What are these guys covering? Well, if we push, right, these guys are going to have to cover. These guys probably already covered. I got a order block here that's been tapped once. Still rotational on a 10 range. It's just rotation. So no trend. How's the YM doing? Okay, so the YM broke. All right, YM just is. Do we? Oh, it looks like we're still sticking with it. We're still stuck on that 65. Boom, boom, double top. Is that not amazing? What algo? Yeah, you've heard me say this many times. I don't know how people trade without knowing that's there. I don't know how they do it, right? How would you not? Because otherwise you're going to buy right into it. It sure looks like a 5, doesn't it? 1, 2, 3, 4. Those are classic 4 into a 5. So 3 down. Or, again, if they're buying calls, which they may be, if they're buying calls, right, this will accelerate because market makers will have to hedge. But what do we really have here? That. Up, down, trend, less. Doesn't mean you can't make a lot of money there. But the big picture is unclear. Let's look at it over here. I like a 300 tick on the YM. Little different setup here, a little more emphasis on market structure, but still just as tradable. Look how we touch, right? Here's the demand, running into the supply. Essentially did the same thing. We just did it at a higher level. What do we got here? Let's pull it back. I have to refresh this IB. Well, you can kind of see the same kind of thing happening here. Consolidation, no trade, pop, up, back to the consolidation, pop. Then we go again. All right. Oh, I guess we do it here. That's the 65. We can see the 65 over here. We're going to get through that. Pre-market mid. You got supply up there. Here's where I don't want it. Again, think of it. It's kind of common sense. Do I want to buy up here? That would be full retail in my mind. I want to buy down here at a discount. Here. At least if you cut that in half, as I have it here. So you look. Okay, so here's buying on sale. Here's buying at full retail. Why do I want to buy up here? That's when retail buys it. Oh, it's safe now. I want to buy on it. You just cut it in half. Tick, by the way, just as useful on the YM. All right, so we're going to climb. Well, if we are going to climb, no problem. I will let that go. I've got no problem. That's what I'll look for. Right? Because when I go into this, I don't want to be. If we go up there and tag it and come, I want to be long going into it. Well, this is, what do we got there? Oh, that's the pre-low. Right, you see, again, another thing to not ignore. Look how that's influenced the market today. Where are my dots? Next level dots. I got dots here, big dots here. Right, so that's a pivot. Again, pivot that broke. You want to trade that? Also, right, this is another reason I like these down here. Okay, well, we just, enthusiasm has stalled, right? This is all just volume. It's a hurry up and wait afternoon. Although I still think we're going to get a ramp into the close, would be my hunch. Well, what are we doing here? We're going down to demand and rallying, going into supply and stalling. You do have a new high here, so you could make a case that this has been realized, consolidation. Right, you almost, you got it right here, but we definitely have it here. Just trying to give you ideas in terms of what to look for. Okay, so here's, slight drift. Here's the order block. You can see why, and you tapped it right here, just one little touch. Okay, always good to keep the midline in sight, right? I draw that in for the 0. Okay, if we're going up here, we just got our tick high of the day. Oh, I didn't even notice that. Anything here I can glean from this? Right to the imbalance. Right, where we drew like, oh shit, well, if it does that, okay, so we can. You gotta pick the right side. Okay. Now, either this, right here, okay. Wrong side. Right, midline in the, The Bollinger Bands on the cum delta, I pay attention to that as well. So if we hold here, we're at the 34. Remember, that's like a 34 period RSI. If we hold here, I want to see that come back around. That's not the signal bar here. I'd like to have it come a little bit lower. This is where we go to ATR, right? So that's just marking when do we go to ATR, which we're given the current level. So it's narrow because the ATR is so narrow right now. Can we hold here? Well, got a golden zone. I don't see headroom here, so I'd be waiting. 230. If we're going to get some action, it should start. Should be signs of it. What do I got down here? Moon runner still running, either moon or scratch, right? Isn't that a comforting feeling, right? So you get your scratches, so you know you're protected. You got your stop at break even or risk reduction. Now you just relax, let her go. It should be just in general. There should be. You see, if you're buying and you're really comfortable, you're probably not buying in the right location. There's almost always a little bit of discomfort when you're buying, because if you're a retracement trader, the market's coming down and now you're looking for the reaction. The reason breakout traders that tends to be retail is because they think, oh, I can buy here because it's going up, or I can sell here because it's going down, which is why breakout traders get bent over so often. Hang on. Okay, there's things to watch. Again, this is a luxury item to have. It's not inexpensive. Right? So we've got some size up here at 82 and then 85. If they get through this, I can guarantee you they're going to that. It's nice if again, there's a lot of cost in getting all these tools. This really is for looking for liquidity about as good as it gets. We briefly entertain the idea of doing something comparable, but they're so far ahead and they're so good. Why? Right? If you can't beat them, join them. I think Irwin still uses it. I don't know that he thinks he needs it. Okay, so here we're looking at that little consolidation. So. I'm so paranoid about accidentally trading a breakout because of all the good. Then I've done my job. So the thing of it is, right? There's going to be some, right? They have to work eventually, right? We can't go sideways forever, right? So, but you don't. It's the same thing. If we were looking at a 4-hour chart of Bitcoin, I'd tell you the same thing. And it's not because I've read it in the book somewhere. It's because I've lived it. There's so many breakouts I've taken, and as soon as I take it, the market drops. So I've just learned to, kind of essentially built it into a rule set for myself. I don't care how far it goes. I don't care. I will wait for that. But so what kicks in, right? FOMO, right? Oh shit, it's going to go and I'm not going to be in. God damn it, right? And then what do? You chase and you buy it at the absolute worst time, right? And particularly since now we can see where the resistance is. I know it's up there. I know it if it's going to get to any of these upper targets, it has to get through. But when I see whether it's an imbalance or a golden zone, I want to be long going into it. I don't want to be there and say, oh, it broke, and then buy it because it'll do that. Okay, so what have we done here? We've tested this. Okay, so this is a good, come here. All right, so swing, consolidate. Okay, now can we, right now I just got a double top, right? So we can clearly see the resistance if we get through here. So that's the temptation. I promise you there are a lot of traders looking at this going, okay, I'm going to buy it on the anticipation we're going to get through. Just as I said, if we get through, I don't care how far it goes, right? I'm going to wait for the retrace because, right, just over many years, someone asked me, oh, how do you trade the market? Oh, I'm a retracement trader. That's it, right? I trade the retracement. A little bit of demand. No, we got a demand zone here. RSI's green. I would not buy it. It's always kind of fun to kind of see. All right, are they going to get it? It'd be nice to get out of this range so we could say, okay, right, if it goes here, great. Pay attention to those guys. That's like getting on the 405 in LA at 3:30. Phew, that's a lot of traffic. I guess they're not all of you that have driven Southern California at 3 o'clock in the afternoon. But if you have, you know what I'm talking about. See, it feels like it's just a slow grind. They're going to grind the bears down. Now let's see if we can get through this. We have clear targets. Grind, right? Then it's going to likely will stall here. What would be surprising, because we don't really have a catalyst for it unless they just start buying calls going into the earnings. I know we have. You guys probably. I know we have Netflix this afternoon. I want to say some of the banks are reporting as well. I should know that. What's the bank index doing? Excuse me. Well, if you look at a daily of the ES, we've come up and tapped some of those big levels. Truly one of the best add-ons that we've done. Where's the low volume? Where's the high volume? Right? I want entry at low volume or exit. Right now, I'm just leaning into the 80% probability that we get there. A lot of traffic. Well, of course, you have the same. This is, and we had some guy. I don't know if he probably bailed, who just couldn't get his head around the idea that you've got this exact same thing happening on the other side. So his issue was, well, how? Let's see if I have to do it this way. How am I going to back test this? Right, he couldn't get comfortable with that. If we get here, don't I have the 80% here? Yeah, you sure do. You sure do. So how do you back test it? You can't. I don't know. I mean, Baby Whale would know. He just couldn't get around that. It's the reality of the markets. Everybody wants the easy. Everybody wants, I just want, I'm going to, you guys know this. You could give 100 people a trading system that was profitable, and no two of them would have the same results. In fact, most would lose money with it. The automated systems, that's kind of hot right now. Run or scratch. Okay, well, he's grinding out some money. I can see that. Automation seems to be what people are looking for now. We notice it across the competitive landscape. As close as I think we are likely to go is the footprint auto trader. But everybody seems to want the easy. Give me the easy button. I think if there was such a thing, well, it wouldn't last long, would it? Right? If everybody's trading it. You can kind of look here. I'll do it this way. Here's our value area. Or at least, right, because we kind of have a double distribution here. I don't have the splitting on that. It might be interesting to turn that on. Let's put auto split because I think we will get a split. Yeah, we will, right? So since we have a double distribution, that's the way he's coded it. So we don't want to have two distribution areas, or two high volume here. So we have this one. So you kind of look at it this way. All right, so there's that high volume. Now I've got another one here. I would fatten that a little bit. So let's make them a little wider. Right, so here's the P, here's the B. Went right to the 50. Right to the imbalance, right to the IB mid. Right, we like to wait for the golden zone because the risk is lower, but there's a corner pocket. Again, 80% odds still in play if, right, it's always a function of the pivot. If the pivot holds. So what's your bias, right? If you're a bear, that's what you're thinking. Perfectly valid approach, right? And really not a bad, let's see if you did it that way. Well, that would be 4.5 to 1. If you're a bear, you should be short. Jim Bino, need to automate to take my emotions. Yeah, I get that, Jim. All right, but really that's a skill you need to develop over time. So if you're emotional about the trades, Jim, usually means you're trading too big, right? You should work on your what do I want to say? You can't be emotional, even, which is like, yeah, duh, right? So easy to say. But the way to take some of that emotion out and just focus on the market and not like, oh, fuck, I'm about to lose $400, is go to the micros until you get really in tune. Like, I'm getting comfortable, and then scale in easily. So maybe your micros, and then you start to add maybe 1 or 2 futures until you start to get a sense of, okay, I'm getting some conviction here. And then the biggest advice, I mean, I've talked, Erwin tells me we have it in the trading panel. Don't move your stops. That's the number one. Believe me, I did it for years, right? And many times you get away with it because you move your stop and the market recovers, and you take some drawdown. I had that yesterday. I was in something and I added, and I didn't have to move my stop, but I was adding to a trade that was going against me because I was fairly confident in the TA. But when you're starting here, you got 2 choices. If you go to the micros, we can trade a little size, but you can really trade the market and not like, well, shit, okay, I can only risk 12 ticks. So if I'm in the full size, it just comes with screen time. It's a fucking no way around it. Everyone is looking for automation, which I know. Erwin's making the point for me, and he would know, right? Everyone is looking for that automation, but it's rarely is it. Even if it's good for a while, it won't be good for long. And if a bunch of people start trading it, then it's going to be good for even less time. It's very hard to take the emotion out of trading. What's more emotional than money? So you got to try and focus on, okay, am I making good trading decisions? If I get stopped out, I get stopped out, right? It's just, you're welcome to the jungle, right? If you get in the ring, you're going to get hit. You got to get comfortable with that, and that takes time. It's hard, right? If I'm mad at myself. You can't be mad at the market. The market is going to do what it's going to do. Everybody's dealing with the same manipulation from whales. Everybody's dealing with all the high-speed frequency trades. We all have to deal with that. But the only way to get emotionally detached is reduce the size. That's why I think micros are such a good place to start, because there's a relaxation when you're risking $20 instead of 200, or 120 instead of 520. It just is a great way to get yourself emotionally dialed into what's going on in the market. Okay, right now it looks like bears are taking control of the ball. Now, what's interesting here, look. Right, we looked at that double top in the YM. All right, shit that does not, I promise you, that is not random. That's just a piece of software. Sold it. Now we come right. Do we get to the low? Well, okay, right. You got the same, I could tell the same story over here. And some people just don't like the answer. Do I not have the same thing here? How would I know? How would I know which side's going to win? Right, answer, you don't. So what does that mean? We're not going to trade it? No, that means we got to use our the other tools we have to look for confluence, whether it's here, here, here. There's got to be more there than just this. Oh, okay, that's good. Well, what else is there? Was there something over here I could see? Wait, no, is it maybe a function of this little consolidation? You got to have more. There can't be just one thing. Because for every one of these, well, this is a good example. For every measured move that succeeds, one breaks. I like your short call would have been profitable. I think I don't know if that's me or Erwin. Sounds like relaxation. I love that handle. You have tons of long-term experienced traders that took years to profit. Then you have, yeah, that's right. Well, then the younger generations that wants an edge without putting it, that you're so right. Sounds like relaxation is really prominent. Because there's so much. God, when I started, even for me in starting, when did I start Trade Devils? 5 years ago. The proliferation of particularly 20-somethings, and no disrespect to 20-somethings, that come on, they're going to teach you how to trade. They've been trading for maybe a year. Maybe they caught a bull market or they caught some crypto rip, and now they've got a paid group in the Discord. It's I mean, like 100 times what it was when I started 5 years ago. I'm astonished. Just going through YouTube, how do you pick, right? So that's people that you kind of find someone and you go, these guys full of shit. The one thing you'll never get from us is hype. Hype. I would be the first person to tell you, right, contrary to what you get in your email inbox, this is the hardest way to make money, not the easiest, the absolute hardest. I don't know of any harder way to make money, yet we're all drawn to it, right? So you have to be drawn to that challenge. Like, oh, that's the hardest? Oh, I want that. Because if you're looking for the easy way, well, there is no easy way to make money in the market, right? Well, as a trader, there's no easy path, right? And particularly, not to be a generational snob, but it does seem like the 20 to 30, 25 to 35, particularly in FX, that's why they're so drawn to market structure, because it comes across as being easy. There's no easy money in here. Zero easy money. And the thing of it is, you can get lucky, you can have a good run. It takes one day where you move a stop, and you move it again, and you can just wipe out everything that you did for the last month. One bad day. That's the issue I have with the funding programs. It's even after you get funded, right? Then it's the trailing drawdown, right? So you really, here's what you can't ever have: 2 bad days in a row, or you're going to blow your account. You can have one day and then recover. I think that's the advantage of, and I guess you guys I'm on their email list because we promote them as affiliates. Apex is really aggressive with their pricing, so you can get multiple accounts. So for those of you that have the resources to do it, Jesus, I got something yesterday said they're doing 90% off. So you can get multiple accounts. So the advantage there being, if you start with one account, let's say you got 2 or 3 accounts, and you're having a bad day, stop trading or have a level like, oh, if I draw down 500, 700, switch accounts. Because if your intention was to trade for X number of hours, whether it's all day or not, switch to another account. Same thing. If you have a good day and you're up $7, $1,000, whatever it may be, switch accounts. At this price point, back when they started with that stuff, when it was Top Step, God, it was $300 a month plus resets. And I mean, it was expensive to participate in those things. A lot of people did. And Top Step made a gazillion dollars. I think they still do. Right, that's a no-lose proposition for them, right? You can see why they went into that business. I mean, there is no way for them to lose money, none. What a great business model. Okay, who's going to win here? So what do you see? Like, oh, so why does it rally there? Well, you tell me. Do you think that fair value gap here was significant? Was it just that, or is there something else there? Let's see here. Maybe a secondary pivot. Let's see if we can get more precise there. And I'm just pulling from here because On a 5-minute, that'd be a good pivot. Front run on the golden zone in a fair value gap. Well, your scalps would be out. Now, pre-low, you tell me if the pre-low is significant, right? And then what do we have here as well? You see that? I'll take that off. You see these dots? Right, there's the dots in the auto fibs, right? Pay attention to those. What is that from? Right, this pivot. Really good on the 15 minutes, right? Has that been important to the market? Again, consolidation, up, down, back. I don't know. Erwin would know, since he wrote the code, as to when they come off, as to when they stop projecting. I'm sure there's a logic to it. I actually don't know. I just know when I'm looking at a 2000 tick and I see those, I don't ignore them. I don't assume we're going to get through. Oh, look at this, interesting. Hard to see that over here. So, okay, failed breakout. Well, remember we were talking about this is often you'll see this, right? If it breaks out of a range by one size, it'll do the exact same on the other side, right? It's just showing, it's almost like the IB, right? We're trendless. I'm a little surprised in that. Well, what did we hit up here? Imbalance, the edge of value. Right? This is a range day for whatever reason. We're rangy. We're going to get anything in the afternoon? Well, are these guys going to win the day? Kind of looks like they might. Or we're just going to, oh shit. Well, even if you're just looking at the McGinley or EMA, right? So, well, here's a good example. That's the EMA, so you can see it a little more clearly because I usually have that Gann high low. Here's the here's the McGinley, here's the EMA, right? So McGinley always leads it just a little bit. That's why I just noticed that. I was like, oh, let's see how this compares to the EMA. I was like, whoa, that's a little bit of an advantage. It leads it just enough to give you like, oh, if I'm in a squeeze, I want to pay attention to that. So let's see if I've got that over here. I think I took them off just because just to show you guys different tools. So here I just have the McGinley, but if I put the 21 EMA, it would be this, you would see it, particularly when you come out of consolidation. The McGinley will give you a slight head start on it. Okay, so who got it here? Well, let's just hang on a sec. So this swing got a new high. Here would be double top. So now we draw this, right? Very, very tight channel. I mean, almost very tight. But at this point, you would assume, you got to visualize. What's the trade we're trying to visualize here? That's what I'm trying to visualize, that we're going to go down and get that, right? It was counter to what I thought we were going to do. Do you want to sell that, right? So, well, do we have anything there? There's a 50. Right, that Alt F is such a handy thing to do, right? So when you're like, God, because sometimes over here I like my volume profile on the right, so sometimes like that little 50 is kind of hard to see. I'm like, oh shit, there's got to be something there. There it is. So this would be if it comes back down. There's the 50. Remember that level we talked about? It was the POC, and then it shifted lower. If we're coming up now, you do the same thing here. You got to do the same thing. The correction has the same, right? You see now the second entry long gets in there. So we know we have, this will be interesting when we get here. I want to be on the right side. What happens at the midline, pushing the upside here. Okay, now, if it's a decision point, now I'm coming over here going, okay, well, who's in trouble? Well, these guys likely already covered. This guy's defending. So my expectation is we're going to go up and then down. So how do we deal with this? So what's here that might give me some confidence, like, oh, all right, well, we're going to hit some turf there. We're going to hit some bumps. I think I can put this. Yeah, I can. I like it on the right side. What's there? Anything? Order block and a fair value gap. Excuse me, fair value gap. Order block. Delta's rising. Kind of a flat McGinley. These guys are defending. That's pretty good size right there. Stacked. This is good size here. I don't see it there. I'll come over here. They're buying, right? Market orders are on the buy side. We're outside of the, let's see. Sounds like, I know you have TDU measured move, and it shows past measured move. It shows measured moves. Oh, well, that's, okay, so it sounds like relaxation. What you're talking about is the distinction between the measured move indicator, which shows confirmed measured moves, and the auto fibs, right? The one is showing you the future, one is showing you the past. So if I put the measured move indicator on here, you'd see every measured move. Well, you could have it show you all the measured moves that succeeded and failed. But it doesn't show up until it confirms the pivot. The auto fibs is showing you in the future. We don't know that it's going to pivot here, but we can see that there's a golden zone here. Do you understand? Does that make sense? The one that shows in progress measured move. Here, let me see. Do I have it somewhere? I've done a couple of vids kind of explaining that difference, because people will write us and say, I bought that measured move indicator, but it doesn't tell me. It's too late. By the time it confirms the pivot, well, it has to travel some distance from the pivot, or we can't confirm the pivot. I don't know how far it goes, but it's a, Erwin could tell you the way he coded it. It has to go a certain distance from the pivot to say, oh, it's a pivot. Here, I'll put it on here. We'll go here. Let's see if I'll find it over here. I don't have it up there. Oh shit, how could I not have that? Hang on. So shit, I may not be able to get it. I need my contact ID. Oh no, there they are. Okay, it did work. Thought I needed my contact ID. Okay, so let's get this back. Okay, so now you see the difference. So here's 50 to the tick, does not get to target. So this is a measured move that has confirmed, and we don't show it until it gets enough distance. Right about here, that's gonna show up on the chart. Same thing here, and you can see one thing I like about these, because I can see the size of the distance between the 50 and the golden zone. I know these are big. I know that's a big swing, so it's drawing from a higher pivot. Whereas if I have a little tiny one, I know it, like this one here, I know that that's from that swing. Here's a good one, right? Do you see that? Tick to tick, right? Swing down, golden zone. Note, not the 61865 gets it to the tick, right? And then that keeps going. So these are all the past with targets down here, right? So these two don't have, their targets haven't been hit. There's where their targets are. Now they're off to the side here on the, it's different. That's golden. That's the auto fibs. These, if this were to hit here, it would have targets way down below, because they're big ones. Shit, that would be. Oh man, they're not down there. These are targets. These are targets. On this degree, I always think the big advantage of the measured move, like it's worth every penny, is that at the end of the day, you're going to go back and you're going to look at the measured moves and you're going to go, are you fucking kidding me? You got to be kidding me. Look how many of these hit. I've seen 15 in a day. 15. I've seen more than that, actually, on a smaller time frame. So it really burns it into your brain, like, oh, I got to pay attention to those. Then how useful is it to you? Well, if you were waiting for this by the time it got here and it shows up, oh, well, okay, I don't necessarily want to short it there because it's moved that far. But the auto fibs would have shown you that 50 and golden zone were there, just like it's showing me. Hopefully this makes sense. Just like it's showing you that these are active right now. Now, because I have the measured move indicator on here, if we pivot here, you're gonna see a 50 in a golden zone. If it breaks here, so right, it won't See, so for example, let's say I had the measured move firing right now and it was showing me that, we're at a measured move location. Well, now it breaks. Well, so now I just, I got a bad trade here because it wasn't a valid measured move because I don't get a pivot at the 65. I mean, here, I let them go 3-4 ticks, but really what I'm looking for, will it close above? I want to see it close above because that kills the algo. All right, so here's the move down, the move up. We're just doing this range rotation. Looks like we're going to clear. Does that make sense? Can you share the link to the video explaining the difference in the measurement? You know what, Damati? If you go to our YouTube channel, I've moved all the videos about that are over on the Trade Devils Indicator. Well, actually, I think they're on both. If you go to the playlist, the first 2 or 3 are all about that. And then I have a couple of videos that are posted in the. I'll find you, Damati. I'll send you the link to a couple that are I just kind of improv, but I talked you through. But I think in the first 3, if you go to our playlist, you'll see auto fibs and measured move, and I talk about all that difference. I'm using one that shows measured move in progress. Okay, so it sounds like relaxation. I would tell, if I had to pick only one, if my budget was just like, well, I got to pick one, I'd pick auto fibs, right? Because that's showing me all the future ones. Ideally, you'd have both. Ideally, right, you do a package deal like we've got going right now, you can pick up both. Boy, look how this range has stayed. It's been like that all day, right? Range, drop, range, up, range. They're waiting for earnings. Things to note, like, so it's always good to go through at the end of the day and say, okay, what can I learn from this, right? Do you think those shark fins are good? TDI, God, what a great indicator. Shark fins. I think someone was talking about we're going to add a little something to that. I don't know, Erwin, if there was some talk about doing something to identify a shark fin. What you'll notice here now, look at this, right? So here's the RSI going out of that's one standard. Oh shit! Well, no, I'm sorry. Pardon me. That's 1.618. That's the spread I have on the Bollinger Bands here. Well, look here. I'm just tagging the Bollinger Band, the low Bollinger Band, as I'm doing that. That's the breakout, right? Look at all the confluence there. See, that makes it a little easier to take that trade. So I look at that and I go, I know that 80+% of all breakouts fail. Now, I've got all of this confluence here suggesting to me that while I may not want to try and pick the turn, there's 2 ways to approach these. If I don't want to try and pick the turn, I want to see if I can get a higher low. Do I get a higher low that would give me the conviction here? Because where's my stop going to be? Now, you trading full size? Well, what's that? That's 12 ticks, $150. Depending on your account size, maybe you take a 1 lot there. If you're doing one of the what do they call the combines, right, or the whatever they call them, the evaluations, right? Maybe you can take a little bit more if you're doing one of the bigger ones. But that's what you're waiting for. Oh, I've got a potential pivot. Oh, let's see what happens. Oh, do I get a higher low? Ooh, I do. Now, you might want to wait until you get on the other side of the McGinley, and right here you got the IB. I mean, so this is so common lately, right? We just grind on the IB. We just grind the IB. Because it's such a battleground for trend, no trend, right? In the higher time frame traders. Okay, so we're just rotating back and forth here. Was there a trade there? Well, here's what you didn't get, right? What's the difference? Here, I got this little pull and then retrace, so I could take that with conviction. Here, well, fuck, I got nothing. It was like the move yesterday. There was no pullback unless you were down to a 512. You just had to watch it go if you weren't in it. Nothing, right? So if you're a retracement trader, off they go, right? And that's the new development in the market with these 0 DTE options is they just go because the market makers have to keep buying. And that is new. Didn't used to be that way. Okay, here we go, back up into this range. Well, so here's where, okay, what's happening with the tick? Are we up in the You know, I want to be looking to be a seller up here. Here's where I want to be. Oh, we got our low. Okay, talk about confluence, right? So we got this as we got the low tick of the day, right? That should give you, as we went outside of the Bollinger Bands here, that should give you a little conviction here to maybe, oh, okay, well, if I was going to take one, maybe I'll, put, I call them almost like a scouting mission, right? Let's throw one in and see how we go. Or micros. Maybe I'll take a couple of micros here and see if it's going to pop off of this, rather than say I'm going to pick the turn. Okay, looks like it just runs for stop liquidity. Well, that's what the market does, Jim. It's always, that's the big advantage of something like this right now. You're going to see where the liquidity is, right? In advance, this is where all the limit orders are. So the market, everybody can see this, right? So, all right, I got 291 up here. What do I have here? Right, 184 just filled, 115. So here I've got 100. I've got 600 here. So this is clearly, well, here's the 650 lot here. So there's liquidity right here. So the market's going to, it's like, are they going to eat it? Or are they going to get rejected? Or are they just, it's like Pac-Man. Are they going to gobble right through it and then blow, because then the next target will be this, the next target will be this, because the market moves to liquidity, right? And that's also the same thing that whales are doing, right? That's what they're looking for. Where's the liquidity, right? Because if they're going to put on some size. So every pivot is liquidity, right? We know that because that's where the stops are. Didn't take a Harvard degree to know where the stops are. Look here, right? That's why when you get in a trading range, even though you keep thinking, oh, it's going to break out, you got to sell the highs and buy the lows. It's hard to do. Easier to do with this kind of a setup because I got a higher low. Easier because I can see, oh, there's my stop. If you're taking this, where's your stop? Well, you'd have to let it get a little further and use the low. If I'm selling here, well, I'd be tight on that stop, which is why, that's the whole advantage. That's why we look for the golden zone, because it's such a low risk trade. We know there's an algo there. Doesn't mean it's going to win the battle, right? One side always loses, but that's the risk. If I take it here, well, look at the difference. If I take the 50, if I'm going to use the 65, I got that distance. If I just take the golden zone, I got that distance. Geez, here I thought it was going to be really good this afternoon. I thought, you know what? Maybe the afternoon may be a better time to do it. I live stream 312. Boy, this day's going fast. They're coming. Come here. Coming back for that. Right, that was right. That's the golden zone. See, there's a good example. I don't have measured. Do I have measured move on here? I don't think I do. I have just auto fibs. Right, so if I turn those on, right, so here's the 618 that it triple topped at, right? So is there any question about whether there's software there? That's not a guy sitting somewhere in a room going, oh, okay, hit the sell button. If what's interesting there, if they get through, you got nothing till here. You got a clean shot, right? Which you're always looking for. We look at all that traffic and you say, fuck, man, how am I going to get through all that? You got a clean shot here. How much distance is there if it gets through? You got 40 ticks, 200 a contract, if we can get through, right, to get up to the next resistance. So no resistance. Now, you'd want to try and be mindful of what you want to be careful about doing here is if it gets up here, you don't want to buy it right there at high ticks. Even if it gets through, because I did this for years. I say, okay, well, it's through now, so it should be clear to go. Well, often, just because it will have gone that far, right, profit taking happens. So you're better, again, this is just after years of doing this and losing plenty of money. You're better to let it do this, right, and come back and test that and then go for it. Be interesting if it gets there, because you can kind of look at it. If we get up there, oh shit, I could be over 600, right? That's not when I want to buy. I want to buy it down here, which this is, that's likely, pretty sure that's the low. That was the low of the day. Okay, and they're gonna go again. Anyone who's trading the YM, I'd be, well, you could probably throw this on there as another hurdle, right? Just that wick rejection that was there, but they get through. It's a good shot they've got at it. Buy the lows, sell the highs. Do you want to sell that high? Well, I don't, unless I'm at extremes here. I'll wait. So much of trading is waiting until, oh, it's just right. But we tend to trade because we think, let's see what happens. That's a skill unto itself to wait. If you want to use a sports analogy, wait for your pitch. Wait for it. Wait for it. Wait for it. You can spend the whole day, and I've gone days where no trade. Well, that's rare. Rare for me to not trade at all because I didn't see anything I like. Because usually something will present itself. All right, we can't get out of this range. All right, that's demand. Okay, so here it's frustrating, but we can't seem to get, we're so range bound here. Okay, so you would have to, at this point, think, okay, here's the push. If I'm going to retrace, I'd be looking for another push to take out that extreme. All right, I don't want to be buying just yet. But down here, we drew that off, right? We've drawn it off a couple of times, right? And note the dots are still there. And what else is there? We're going to come down that low. Well, here, remember, we kind of did it this way. We said, okay, this is the discount zone right here of this range. So if I can come down here into this 50, this golden zone here, if I can come down and get a buy, then that looks appealing. Can I get this? I'm always trying to visualize the trade I want, right? And there would be my target. Because if it comes down here, well, shit, I was waiting for it. Now, that's when, so if I'm here and I'm watching this, because this is my focal point. Now, if it's right here, now I'm coming over to the footprint chart. So, okay, where are we? What's there? If I get down here, well, where is that? 41.74. That's right here in the pocket here. Maybe this will play ball for us. That is right here, right here. May not get there, right? So I got fair value gaps here. I got something kicking there. Remember, these trigger at the first moment that it's qualified for it, but then it can go away, right? So it's not a repaint. It's just, it was, okay, I can't remember what that is. I think that's delta divergence. So we're in the middle of the bar, we don't know if that's going to hold as divergence or not. Okay, so we know we're looking for it to come down a little bit. Who's the problem child? Well, this is where you can kind of look left and say, okay, there's a lot of size over there. These guys probably defending. You want to get them in trouble. Many of these here you see stacked imbalance, but it's not big size. So this would be not something I'd really be concerned with. If I'm looking in intra-candle, I'm looking for where's big size standing out. This is nothing, right? A 62 lot. I want to see 300, 400, 500, 600, 700, 800, or within a couple of ticks, I can see 1,000 lots, like we saw this morning. Here's a big cluster. But good. Well, now the other thing that should give you some confidence here, if we're going to come down, if this is up and then we're coming down, well, I got fair value gaps. I've got the McGinley here. I've got a POC. I've got a high volume node. If we come down, I've got all this support here. So I want to be buying down here. I can buy a little, well, back to how do I get comfortable? Well, the market's coming down. Oh, shit. Do I want to sell it? Well, I don't want to sell right into a fair value gap. That's an imbalance. I'm looking for the buy. Shit, do I have auto fibs here? Yeah, I do. Okay, so right down, well, we just drew it, right? If we come down in here, so we're just in this box. It happens a lot. Caught in a box. I'd be looking for the buy here. We're above the McGinley, right? So the bias is higher. But I can't get these broken. Good morning, kind of a shitty afternoon. This would be my luck with the live streams, but at least we got it working, so it actually worked. Holy shit. I got it. Hopefully nobody sees those, because it's kind of embarrassing. I think I got it sorted out. I got to figure out my bit rate, whatever that means. May not give it. Right? I wanted it, may not get it. You can often just use the 21 McGinley or 21 EMA. Where's my bias? What side am I on? Okay, I want to be looking long. Might redraw that. This is so narrow, right? If we take out this high, then this is DQ'd, or it's part of this. So it's a double top. Nice tight little channel, right? Biases to the upside. I want the break. So I want I get a couple of things here. I want the break of the channel, and then I want to come down to something technical. Do I get it? May not. Any clues over here? Well, we see this area here has been, well, that's the 50. So this is a good example. I do not have measured move on here for, I think it was sounds like relaxation. No measured move, so it's just auto fibs here. Here's the B. Well, see how skinny it is? Since we split here, so here's the P, here's the B. If we can get up here, there's a good shot. You've got room. That's not where I would take it. Really, you want to be long from here. Easy to say in hindsight, right? I know. Oh. Come here. Okay, so this is one of the features of the, what do we call it? The auto range is that when we pat, so here the median lines are not really any use to me now. So I can go Alt P, I think it's Alt P, and I can take the median lines off. Now I've just got this nice channel. It's a 3-point, always with the auto range. It's a 3-point channel. Because, right, it's also showing you the median line. So if we're going to go up here, well, this will be interesting. Okay. Neutral. So there's headroom on either side. So you can go either way, which is why you wouldn't have any advantage here. So if we were hitting that 50 and that you'd like it to be up here, you say, oh, well, they're going to take some profit, and down we go. And this is really most helpful on your entry as to what happens after you get in. That's why the initial thought is this is a scalping tool for entry. So there we go, right? Tags the 50, tags that zone, rejected. All day, right? All day, that's been the resistance. I'll take that off now. Nice, tight little channel. I want to be looking on the buy side. There's really nothing to do until we retrace a little bit. Oh, let's see. Sounds like using automation is to find your near setup, takes the edge off waiting. That's a good way to think of it. Looks like it just runs for yeah, that's right. Video linked off that page, mate. Oh, I think that's Simon is giving you the links. That's what I think that is. What a great addition to the team Bobber70 has been. I've been so lucky with the people that I've been able to work with. I have to say, just lucky, lucky, lucky. Okay, what do you want to be a buyer? Well, if I were to pivot here, this will keep you on the right side of the market. Okay, so it's doing just what we wanted, right? We wanted to come down here. This is maybe POC, and now we're going to wrestle with VWAP. But it's not a great retracement because it's not far enough, right? On the 2000, I'd want it a little lower. Here's the discount range, right? Come on down. Good. You know, I 600 is where I'm very comfortable buying it. Question for Irwin: any plans to add bullish or bearish FFG signal plots? Signal plots. What do you mean, Damati? So if we were to hit a fair value gap, we would have a little buy or sell triangle or dot or something. Is that what you mean? When we hit a fair value gap? Well, we're hitting one right now. We just hit one. Right, this one is right here. Okay, we're doing just what we were looking for. Look what it did. Speak of those dots, right to this dot. It's just a support and resistance pivot. That's all it is. But funny how the market responds to those. Okay, so now we're looking over here. You can see the size coming in, trying to use it with Bloodhound. I get you. I see you. I'm not a Bloodhound user, so I have to defer to Irwin, and I think Simon's learning it. Okay, so here's the spot we're looking for, I think. Yes, it is. All right, we got a couple of fair value gaps. Yeah, I get you, Damani. That's probably have to maybe post it in that channel. Okay, there's some size coming in here as we come down here. So then you got a stacked imbalance. So I want these guys to feel the squeeze, right? So I want those guys to have to cover. So long here, well, let's see how they wrestle with it. If we get on the other side of it, you're probably good. You probably got the room up here. I'd take that. You got room to that. There's 15 ticks. If we start to go. Now it's neutral, right? You have no edge here, but there's room on either side. There's a gap, but I don't have any way to identify. That might be, yeah, that's definitely one for Irwin. We're right at them. Well, let's go over here. Do we have a second entry? We have one. Well, there's one. We don't really have one. I want this to come back around. That's right where we were looking for it. Now you could, right? So for micro trader, I'd be long already, because you can do, what's your risk there? $20, right? Boom, there you go. Oh my God, I love it when that happens. You kind of map it out, and bingo. Now we're not out of the woods yet, because remember, this is the bitch of it, right? There's this, right? You got to deal with that potential. You got to clear here. And that's where the footprint can help. Okay, how strong are we here? Who's going to have to cover? Who do we have to fight through? That's a lot of size in that candle. This is a much bigger size than in this one. But you got to take a little risk here, right? Stop under the pivot. You'd like that to get on the other side. But in my view here, the trade would be long, because you're looking for that trend line rule to hold. Swing, we broke. You have the same thing going the other direction. So if we roll over, it'll be because this channel is dominant. Boy, what a chop monster. We haven't had one of these for a while. Shit, there's not a lot of good trades I could tee up. I'd be long here. Probably not with size, maybe micros. I wouldn't be aggressive. You're middle of the range. Now, if I'm long a couple of micros here because of the trading range nature of this, if the RSI gets green on the other side, I'd be adding. I want the cum delta to get on the other side of the center line. Wouldn't mind seeing the ease of movement, the efficiency ratio color go blue. We're neutral, right? There's nobody's really pushing. What do I got here? Oh, that's so nice, Damati. I appreciate it. I'll mix it up. I was trying to. I know I had so many troubles this morning here, but I think I've got it figured out. Of course, I thought I had it figured out last week, and then it threw me for a little. What makes this so hard? You can't. There's no like holding room where you can say, "Oh, is everything working?" Oh, okay, let's go live. You got to go live to find out if it's working, and that's what's been kind of plaguing me. All right. Well, I'm quick to draw these if I think there's something there. All right, so I get a 3-point channel. I don't know that set of median lines is doing me much. So this trend line here looks good. But I've got this channel. Now this is something that it's on my wish list. I haven't even told them yet. I want to be able to change that color so I don't lose it for the next version of the toolbar. I want a little color. So if I highlight this, I want to be able to go up here and change the color so I can stand it out, because I have this trend, I have the fatter trend, I have this trend. You can get kind of lost in if they're all the same color. That's a good example of how he and I come up with stuff. We trade it for a while, and you go, you know what would make this better if we could do this? And the thing about him is, over the weekend, I'll get something that was 3 times better than what I was thinking. We know this is the buy zone down here. We didn't get the turn. Now, if you're micros, are you nervous? No. If you're full size, are you nervous? Probably. Depending on your size. It's not doing anything. I'm flatlining on the McGinley. I'm at the POC and VWAP. I'm neutral here. Okay, a little climb. That's again micros. I might be looking to add there. How are we doing? It's 3:30. If we're going to get anything other than this would be surprising if we're just going to drift into the close at VWAP. Well, we might. So many earnings. I think all the big earnings are after the bell. I had someone ask me this the other day, and I didn't know the answer. In these in the combines, the trading qualifying things, do you keep trading after 4? Because since it's technically the RTH goes till 5 now, I didn't know the answer to that. Okay, now let's see how we look over here. It's good. This is a pretty good size here. Okay, well, right. So this is always what I'm thinking. Okay, I've got a swing. I have a retracement that is internal to this is an internal retracement. Now, can it go external? Right, it can only do one. Right, it's 2-dimensional. It's only do one or the other. 450 now. Oh, that's good to know. Right, I had a member ask me, and I didn't know. So you can trade until 5. Oh, that's new. I thought it was the bell, but well, if I take this off, what do we bounce into? Fair value gap. All these guys defending. That's pretty good size in there. These guys, now I want these guys uncomfortable, right? That's enough here. There's a 400, 100, 200. We want them uncomfortable. You got to clear this. All right, the 50s. All right, so these guys get a little further. They're going to start to get nervous. We're going. There's still room. There's still room to go. There's headroom. Anything up there that might draw it? Well, we can see the liquidities up here. They're going to go, what's up there? 200 lot, 300. There's some size up here starting to go, right? So these would be natural gravitational, market will move to them. You could be long, well, shit, if you're micros here, you could be adding now. You got the last hurdle. These guys right here. You got to clear them. That POC, and you got the little cluster here. You got side-by-side POCs. I want these guys to have to cover, and to do that, now the bummer of that, and it's just the way the day has played, look who's up there. So how aggressive do you want to be looking for new highs, right, with all of that to clear? I've seen it just plow right through them, and if it's going to happen, if there's anticipation that they want to get long on good earnings, well, they'll plow right through these, but it makes for a high-risk place to trade. Okay, so this is another look at it. So this one, so there's that little consolidation. I love that feature of the Pats, right? Little consolidation. Oh, it's almost like it's I don't have a squeeze indicator on here. It's like a squeeze, right? Nothing's happening. We're consolidating. From consolidation comes expansion. It's unbelievably consistent. Yeah, 5 in a row. And now we're green. But we can't seem to get out of this range that we're in. This is one of the most low volatility days other than the initial sell-off. These guys still can't get through that. That was that triple top of the 65 up here. Stuck in a rut with a big fat butt. Here, another look at it. Do I measure moves on there? I think I do. How do you can't, I wouldn't buy that. Well, so here's the swing, here's the retrace. Are we doing that? Well, if there's a bunch of misses, we might. If they miss. A lot of talk about, well, in the context of automation, my news feeds, right, are all trade related. I swear to God, I get 10 articles a day about AI. 10. And you see it now. Of course, there's dozens and dozens now of videos that you'll see on YouTube. I asked ChatGPT to build me a trading system, and it's made 330% every day since I'm that careful of that shit. It plays it plays into the retail sentiment of like, oh, it's going to be easy. I'll just ask a piece of code, like, what do I buy or do I sell? And then I don't even have to think. You're seeing them already. I see dozens of them. But it's definitely going to, over the next 5 years, probably change everything again. Just like zero DTE options have changed the complexion of the market, all of this artificial intelligence is going to have an impact. God damn, 338. Are we really going to just have an entire? We might. It's been a long time since we've seen a day like this where we just went into a range from noon through the close. Well, you'd be thinking if we're going to get a rip, likely to the upside. Because, see, why would it sell off? You got kind of got to think that way. Well, are they anticipating a big miss, so they're going to start selling? I don't know. Anything's possible. I don't think we're going to get much more. If there's going to be a big rip, maybe it comes after the bell. which is that they used to be able to do that, right? No one could trade it. Now, I guess there's much more trading after the bell. They open that up, which is a good thing. Volume dries up. They used to be able to do it because there was no volume against them. So after the bell, from 4 to 4:30, you see massive rips. No volume to be on the other side. What do we got here? Eventually, we'll have consumer-facing AI that will be trading with smart money. You're right. All right. It's how it's going to change trading. I'm not sure, but it's definitely going to change. It could be that the market maker they'll be able to have software do it. I mean, they have software doing it now. They have option models, so they know what their delta and their gamma exposure is. Gamma is the hot thing right now. That's what a couple of years ago, the gamma squeezes. Gamma, just the rate of the change of the delta, but it's more pronounced the closer you are to expiration, which is why these 0DT hedges, you see so much discussion of gamma. Because the closer to expiration and the closer to the money, the higher the gamma. So the market makers have to scramble, which is why the 0DTEs has been, it's created massive amount of volume. So the brokers are making plenty of money, but they have to scramble to stay neutral. Okay, all right. I want to be on the right. I want to be on the. If the RSI is red, I want to be short. If it's green, I want to be long. Right now, I would. If I was still long, if it was full size, I'd probably be out because I don't see any edge here. If it was micros, I'd let them run. Let's see if we get a pop here. All right, if it's going to happen, it better hurry up. Okay, let's go over here, see if we can get any clues. Are they starting to bring any muscle? Well, note the POCs all lined up here. Now, can they get through these guys? And really, this is what I'm thinking all day long. I'm just doing it out loud. There's still room. There's still room here. If it gets over 600, I get uncomfortable buying. But from 4 to 8, there's room. Here we go. RSI just went green, right? So if you sat through that chop, and whether full size or micros, you're a little more comfortable. Now we just ran right into the resistance. And got rejected. Boy, if you're in full size, you're discouraged there. You would have thought that would have been it. What did they run into? These guys. Back to the McGinley. I like this, how he coded this in where the imbalance, where I can see like, oh, okay, there's some size here. They're going to push for this. Delta is going positive. Where's my volume is dropping off here, right? So we go 12K, 11K, 3,600, 3,700. Now this bar's not done yet, but look at the drop off in volume. Minimum delta of 1. So this is, surprised that's not triggering. Closing at the delta high. I thought I had that highlighted. Here's a trap. I'd be long. Or if you're in micros, I'd be adding, because we're running out of time. You can be aggressive with micros. Well, you go to a 10 lot, right? You're still not up to what a full lot is. But you're paying the fees. That's the trade-off. These are the support. Take profit up there. What do I have set in there? I think I have this internally set to 5 ticks. No. What do I have? I have 8 ticks. 8 ticks from entry to target for your scalps. Boy, we drew that little discount zone up beautifully. It just put one little wick into it, and then off we go. Now, here, I'm good. I'd be comfortable. I'd be adding again because you don't, at this point, there's not a lot of time. So I'd be adding thinking, well, how far can this go? Like, can we get up to target here? You got a big hurdle right here. You know, well, there's almost zero possibility that we're going to go here. We're not going to get a reaction. We're going to get a reaction, but here would be a place to add. Try and get there. Look, we're going to get a reaction there. Doesn't mean we can't get through it, but you're likely to get a reaction. Plus, it's the open, which an algo would use. Go, 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 go. There we go, right? So you can add. So when where I'm most aggressive is when I'm right. I'll add. Now, you know, if it comes back at you, you got to eat that. But, you know, when you're right, you got to get maximum benefit. So you don't want to do it when you're having a bad day. But when you're up and you've got some cushion to work with, you got to maximize when you're right. So here's the swing structure that we're looking to complete. Just the trend line rule, right? Swing, retrace. Now I want a new high. All right, can I get a new extreme? That's what I think we're going to get if we can clear this. 345. Oh, this is good, right? So there's plenty of headroom there. Getting a little extended here. Look at the expansion, right? You just visually see it going here. Contraction, expansion, contraction, expansion. A little contraction here in the RSI. Neutral. 345. Well, if there's going to be any sort of a rip, it better hurry up. Yeah. Oh, there's a few red capes being waved up here. Pretty good size at 41.85, which is up here at this golden zone. We went neutral again down here. Kind of a shitty afternoon. God, here I thought it was going to be great this afternoon. Okay, no need for anyone to stay in front of the screen to trade. That's true. Eventually, yeah. Unless I'm trading, it's hard. If I'm trading futures, it's hard for me to walk away from the screen if I'm in the market. But if I'm in options, different story. And don't shy. You know, you can take what we're doing here on, say, a 2,000 tick, and you can trade options. You can trade the 0DT options. Much more forgiving. But it's very tempting when you're trading 0DTE to just let them go. So the money management becomes, I think, a little more challenging, but it's more forgiving. If you end up being right, you can do just fine. Double top. Wow. I'm not going to get anything on that. Well, that's disappointing. All right. Well, I think we probably wrap it. If we get anything. Oh, shit. I don't know that I can add much here. Last 10 minutes. A lot of people, if you're in something, you might let it run. You get into the last 10 minutes, you can get a little squirrely. Maybe not a great time to be entering. Although, I guess we've got an extra hour now, too. You're back to the McGinley. If anything, you'd be looking for a kick. Well, here a little bit. Edge of value. Nope. Well, I guess they're just going to wait until those earnings come out. Unusually dull day. Really surprising. Well, it kind of worked out better for me to crash and burn this morning so I could trade this morning. And this would have been a snooze fest. I'd have probably done nothing but get chopped alive this afternoon. All right, I think that's probably do it for the day. All right, guys, I guess we'll wrap it. We'll get the last 10 minutes. I'm going to go get some lunch. I always hope these are helpful. I don't know that they are, but the more questions you guys ask me, I think probably the better. And always nice when Erwin and Simon are on as well, because they can answer a lot of this stuff. All right, guys, we'll call it a day here. I'll talk to Erwin. Maybe we'll do a Thursday, ask us anything kind of a thing. Well, here we go. 350, they're going to dump it. Now, that can be a setup. That can be a last. It's kind of late in the day for that. They might be sweeping week longs here. That's a real possibility. That's not enough size, right? So I wouldn't be scared of that. 64 lot, 61, 51, it's not enough, right? Now, there's some muscle coming in. So that looks like they're just trying to take out week longs. We'll see. It may just be choppy. Okay, guys. I will wrap it there, and we may be back Thursday. We'll let you know now that I think we've got the technology figured out. Okay, guys, have a good afternoon. Talk to you later.